put together the rotational market so that we can see what happened inside this VIX-M, VIX-Y narrative. Okay, so without looking at this storyline, we obviously can look at things like the the skew, of course, on a daily chart. But if I now compare this and I start typing in the likes of the XLK, so for example, if we just did XLK, which you can see is tech, XLF, which is financials, XLY, which is discretionaries, and obviously what we're going to do is we're going to look at that as a relationship to XLV, and you'll see XLV is healthcare, so that's a staple. XLU, which is what? Utilities. And XLP, which is what? Staples. So these are all the defensive rotations, right? So obviously if this line is getting sold, well, they're rotating into defensive stocks. They're rotating away from cyclicals into defensives, aren't they? They're looking for that defensive posturing for the market to sell off. So when we look at that line, we're asking the question, do we see any weakness in it? Well, what's the answer to the question? Did we see any weakness into that line, guys? Yes or no? So when we look at the volatility narrative, and we see the volatility narrative, which is the candles, and then we look at the defensive rotations and they're bearish, and then we add in the S&P, which is now the black line. Is there anybody on the planet that doesn't know why the S&P sold off yesterday? Seriously? Is there any doubt about that selling action on the S&P? So obviously when the S&P sold off yesterday, this wasn't now surprising anymore, was it? This wasn't surprising. We got exactly what we were expecting to get from that big commercial rotation into defensive stocks. And that sell at the top edge is just brilliant. Well, they weren't asking why they rotated. I think what they were asking was, why did it drop? That's what they were saying. Why did it drop? We don't know why it dropped. Well, the reason why it dropped was because the big boys were getting defensive at higher prices. If the question was, why were the big boys getting defensive at higher prices? That's a different question then, Jack, isn't it? And the reason why the big boys were getting defensive at higher prices, well, it could be a whole sackload of reasons. It could have been a whole sackload of reasons. What could they have been? Well, we don't. There's an awful lot of reasons why. I mean, it could just simply be because of the run-up that we've had in price. You know, we can obviously look at the big run-up we've had in price. We can obviously look at that. We can look at the fact that we've had this massive rally in price here, Jack. So, you know, would you not be defensive? Would you not be defensive about the fact that we've kind of plateaued out and we're starting to see prices starting to run a little bit more sideways? I think most people are just going to be defensive against that. Would you not be? I would be pretty defensive against that myself. So obviously when we started to see some weakness coming into the stories, you know, I'm not thinking that the market's got Crashville, Tennessee written all over it. I think we've got, you know, we've obviously got a very obvious bracket level down at the bottom edge that we can be paying attention to as well for pullbacks. But you know, the sell at the highs, I think, was a no-brainer. You know, just looking at the shape of that, I think the sell at the high was an absolute no-brainer. It was a little bit like what happened here, the same sell-off with the same rotation, Jack, see it? So we got that same sell-off here from that higher high price down to that bracket. I think it's almost a mirror image of what happened before. You know, just a mirror image of what happened before at these higher prints. And, you know, it's had the same response, to be honest. So I don't think it was surprising at all. I think it was just a normal profit-taking concept that I think most people would, just sit back and say, yep, that makes perfect sense. Why they took some profits, why they did a little bit more defensive rotations. It makes perfect sense to see it. But obviously, when we're looking at the positioning of the puts and the calls, it didn't really give as much. They'd been starting to ramp down on the number of trades. They were starting to build up on the puts positioning, and it was maybe more of a speculative put, which has probably helped to cause the slide. But that's speculative put, of course. Speculative. What do I mean by that comment? What does that mean, if it means anything? Well, when you think about it, what I've now done is I've now put the puts and calls on the charts. Hold on a second, guys. So you can see the number of puts that are starting to spike into this market. And obviously when they spiked really high here, the price stopped and rallied. That's the problem. When too many puts come in at lower prices, the price stops because it gets that gamma idea and everything stops at that point. When it drops back off again, of course, that opens the door for the price to drop. And that's exactly what happened. The price managed to roll out and drop, but then we get this huge spike in the puts and it stops the price dropping. And the price has rallied beautifully from the huge spike in puts. Just as it always rallies beautifully from a huge spike in puts, isn't it? So we always watch for that huge spike in the number of puts coming in for the gammas, and then we start watching that because that will probably cause the bottom edge and the price will bounce off of that. 10 minutes, guys. 10 minutes for the bond traders. Watch out. Careful, careful, careful. Squeaky, squeaky careful, guys, just now, because it's squeaky bum time on the quarterly refunding. Yes, all your bond traders know. Well, you all know if you followed the tweets. I'm sure most of you do know. Quarterly refunding today, guys, at 1:30. Size expected to be unchanged, but obviously it can be very, very volatile for bonds. So just be very, very cautious if the refunding value, the number, comes out increasing. That's putting a lot more supply into the markets, guys. That's going to drive bond prices sharply lower. If the number comes out less than expected, then obviously that's a reduction in the supply, which means the bond price will rapidly rally. So just be watching. The market is not expecting any change to the quarterly refunding numbers. Okay, so just bear that in mind. There's a no change forecast on this one. There's a no change forecast on this one at the moment, so just be aware of it. Just be aware of it, guys.